Welcome back to Fast Money. We've got a Bitcoin alert. The cryptocurrency soaring 8% to another all-time high. The record run comes as a major player in the space. Coinbase files plans today to go public. And Bitcoin, the boom is creating a big payday for the payment stocks. Check out PayPal and Square. Both stocks have been on a tear as Bitcoin breaks out to new highs. Our next guest says there are even bigger gains ahead. Let's bring in Dan Dolev. He covers the payment stocks at Mizuho. Dan, great to speak with you.
Thanks, Melissa. It was a pleasure being on your show.
Help us to understand how we should regard Bitcoin as a part of these stocks businesses, specifically PayPal and Square. I would imagine it's a small percentage of revenues. It's quickly growing, and yet the big percentage of the gains in the stock have been driven by this Bitcoin rally.
Exactly. So we've actually done a lot of survey work. And what we've done on PayPal specifically is we've surveyed almost 400 users of PayPal. What we found out is that almost 20% of the users have started trading Bitcoin. And we think of Bitcoin not as the Bitcoin revenue itself, but actually as the vehicle to boost engagement on the app. So we actually think about engagement as a driver of revenue growth, not as an output of revenue. And what you're seeing is that 50% of the people that use Bitcoin have actually reported an increase in engagement. So what that does, that means that those people are actually going to use more and more products and services that PayPal is offering. It's going to make PayPal more the center of their financial life. Same thing for Square, by the way. So Bitcoin by itself is a way to boost engagement, and that's what came out of our survey.
See crypto back near records. Enthusiasm is back in a big way across the crypto space. Bitcoin trading above 23,000 earlier today. Joining us now to talk more about all things crypto is Alex Mashinsky. He is the CEO of Celsius Network. Alex, thanks for joining the program today. I'll begin with a question I'm sure you get all the time, which is why 2020 is different than 2017 in crypto land, because I know folks in financial markets are drawing those comparisons, but the crypto people have a very different view on where the market is at this time around.
Yeah, thanks for having me. Crypto is definitely having an amazing year. What a week, also all-time highs. I think that unlike 2017, where we had this mass dash by retail, as you can see, if you go to Google Trends and just type Bitcoin and look at 2017, you'll see that huge spike. You don't see that today because it's a much broader adoption, both from institution and for retail, from family offices and so on. So most people already know what Bitcoin is, and they're just continuing to accumulate, and that makes all the difference.
Alex, it's Julie here. Can you sort of outline for us, and I know this is a discussion that is had frequently, but what is Bitcoin for? Like we had Mike Novogratz on recently, and he said, this is something that has value because we've decided that it does, right? And so if you're looking over the long term, what is the case that this is a thing that should have value?
Right. So look, the problem we have is that all the currencies, the fiat currencies, the dollar, the yen, the euro, are things that the government or the banks continue to print, right, and continue to create. So there's basically unlimited supply of those currencies. So what more and more people are realizing is that you need to have something that is scarcity. And I think the older generation is very comfortable with gold as being that insurance policy against the inflation, monetary inflation. But the younger generation is looking for the digital version of it. And the digital version that has scarcity, even more scarce than gold, is Bitcoin. So for example, the Celsius community, which is about 250,000 people worldwide, has entrusted us with over $4 billion worth of these assets. And we just see them accumulate. We don't see them selling. We don't see them trading. They just keep basically putting more and more insurance for doomsday insurance. And Bitcoin is store of value. That's really what the main function of Bitcoin is. It is not a great form of payment. It is not a great medium of exchange, but it's an exceptional store of value. It's the best performing asset class in the last 10 years.
Well, Seth, I mean, you talk about the big money managers. One of the biggest out there is, of course, Guggenheim, and they've been putting through the desire to be able to buy crypto into some of their funds. We actually spoke with Scott Minerd earlier, all to do with the Federal Reserve. But he came out with this eye-watering, eye-popping sort of viewpoint on where crypto is going. Just take a listen.
We made the decision to start allocating toward Bitcoin when Bitcoin was at 10,000. It's a little more challenging with the current price closer to 20,000. Amazing, over a very short period of time, how big of a run-up we've had. But having said that, our fundamental work shows that Bitcoin should be worth about $400,000.
400,000. That had our jaws on the floor. We had to sort of call him up and make sure he was meaning it. Talk to us about that 400,000 figure. How quickly does he get there, Seth?
Well, the way we're thinking about it, and my involvement in Bitcoin started in 2012, and CoinFund was founded in 2015. The way we're thinking about it is, if you look at kind of the pattern recognition of Bitcoin's 4-year cycles, 150 to 250,000 looks like the base case. But here's the thing, it's becoming an institutional asset class this cycle. And that strikes me as being analogous to, my background is in equities. When Tesla stepped up from the $25 to $35 range up to 150 to 350, and then it consolidated for a while, I think we could actually pull forward the next cycle, see Bitcoin go to 500,000 to 1 million, and then probably consolidate for a few years in that range. But I think we could actually get there in the 21, 22 timeframe.
Joining me now is Charles Cascarilla, the co-founder and CEO of Paxos, the cryptocurrency partner for PayPal. Charles, it's great to have you. And listen, I mean, let's say I just am somebody whose pension fund has now, 0.5% or 1% allocation to Bitcoin. Should I be comfortable with that?
Well, I mean, look, I think having a small allocation of Bitcoin is something almost everybody should have. But at the same time, it's really thinking of it as a call option. The point of owning gold is because you want to have a store of value. The point of owning Bitcoin is that it could become gold. And so we don't know exactly if that's going to happen. It's possible, it might not. But on the other hand, it's been around now for 12 years. It's lived through a lot of turmoil, a lot of tests. It's the best example we have of digital gold. And what we've seen through COVID is that people's lives are more and more digital. They're online. They need to have a digital store of value. And just as importantly, everyone has seen what's going on with the Federal Reserve balance sheet, and people are looking for ways in which they can protect their assets. And so Bitcoin is an example of one way to do that.
Absolutely, Charles, although it's interesting to me that in some ways it's quite simply the herd mentality where people realize, okay, there's going to be 21 million of them. Bill Miller made this great point. He said there's 47 million millionaires in the world, and there's only going to be 21 million Bitcoin. So in other words, if every millionaire on the planet just wanted one, they couldn't get it. There's not enough. So, it's just a herd thing where everyone realizes, oh, okay, this is going to be the thing to own, and so we all better own it. And from that point of view, the sky's the limit, isn't it?
Well, I mean, look, that's certainly one way in which the price goes up. You get a lot of people buying something that has a finite amount. But on the other hand, there is some fundamental relevance to what's going on here, which is that there is a need for a store of value. There's a need for a purely digital store of value. And that's what Bitcoin represents. And so there's, of course, other ways that could happen. And it doesn't need to necessarily be Bitcoin. But so far, nothing has come along that's better. And so this is a real chance to own something at the early stages of a transformation. And really, you're going now from an early adopter community to the mainstream. And I think that's partly what PayPal enabling this for their users is bringing to light. There's maybe 40 or 50 million people that were involved in the Bitcoin ecosystem up till now. And instead, we're going to go to something that looks like billions of people over the next year. That's a huge shift.
JP Morgan analyst came out saying that the Grayscale Bitcoin Trust has seen inflows of almost $2 billion since October, compared with outflows of $7 billion for ETFs backed by gold. So is gold dying at the hands of Bitcoin? That's what we will be discussing today. And what a great guest to talk about this with. Robert Kiyosaki, bestselling author of Rich Dad, Poor Dad, and many other books. Robert, always good to have you on. Welcome back.
Oh, no, thank you. Thank you. And great subject to talk about. For full disclosure, I own Bitcoin, I own gold, and I own silver.
And that's why I thought you'd be perfect, Robert, because I know you're in all these and you're not favoring one over the other right now. But the question is gold dead?
No, people miss the macro. I think our national debt is over $50 trillion. Don't quote me on it. So you think Bitcoin's going to cover that? You think silver is going to cover that? You think gold's going to cover that? So as gold goes down, to me, it's a buying opportunity. The same as when Bitcoin crashed, it was a buying opportunity. And so all you guys who are gold guys, just look at the biggest problem of all. This COVID is not going away. And the economy is crashing. And they haven't started to print money yet. Look at Janet Yellen. I don't know what that means. If she becomes Treasury Secretary, she was Fed chairman. And if Biden persists, she becomes Secretary of Treasury. That's the marrying of the Fed and the Treasury. That's MMT. That's magical or Marxist monetary theory. They're going to print like crazy. So I think our deficit is really around 50 trillion, off-balance sheet liabilities and all this. Plus, our pensions are going to collapse. So it's really bad news, but it's good news for gold.
Everybody's jumping in. 23,000, probably heading higher. Has Bitcoin gone past its status as perhaps a speculative store of value?
Yes, Linda, good to be back. No, absolutely. This past week was a historic week for not only Bitcoin, but crypto assets. But really what sets it apart probably from what all the ups and downs we have seen in the last couple of years is that this rally now, Linda, seems to be driven by institutional investors. As you know, over the last couple of months, we saw many of the large hedge funds and asset managers, from Paul Tudor Jones to the Guggenheims of this world. Even the last 48 hours, we had funds like Ruffer, we had funds like One River announce that they bought 750 and 600 million respectively in Bitcoin. So you're having a lot of these institutional players come in and really really enter the space. And frankly, they're able to do this because of two main reasons. The first one is, unlike a couple of years ago, right now you have a lot of these traditional instruments that these funds can use to access the ecosystem. The Bitcoin futures on the CME are a great example. And second, unlike 2017 in the last rally, you have now a lot of regulated counterparties from crypto exchanges, OTC desks, crypto funds, crypto custodians. And really, this really changes the game. So we can really say that it's really becoming institutional investors are coming in, and that pretty much changes the game when it comes to the whole crypto assets market.
I'm just wondering, the way it's trading, is it linked to any other asset classes, or is it perhaps trading in its own world? Any correlation with, whether it is, I don't know, gold, risk assets? What are you seeing?
Yeah, it's a good question, Leslie. Often what you'll see is many people will relate to Bitcoin as being a digital version of gold. And actually, if you look at the statements a lot of these buy-side asset managers have made, they often look at it as a kind of as a hedge against inflation, or as a reaction to the record levels of quantitative easing that we have seen around the world. And a great example of this is when you look at some of the more traditional companies that have bought Bitcoin for that particular reason. I mean, a great example this week is the 169-year-old insurance company Mass Mutual that announced that they had bought $100 million in Bitcoin, again, for this particular reason as well. And you've seen now numerous companies buy Bitcoin as part of their treasury because they see it as a hedge against inflation. So I think many people are now seeing it as that kind of positioning they're taking when it comes to Bitcoin, particularly from a lot of the more traditional financial institution or corporates from that perspective.
It's once again flirting with $20,000. Can you put a price on your level of bullishness?
We are extremely bullish. Our confidence in it has gone up since 2017, because what we saw as it dropped from 20,000 to below 4,000, it actually got well into the threes, I think in 2019, was that Bitcoin's share of the crypto asset ecosystem moved from the low 30% range in terms of value, network values, into the low 70% range. And what did that tell us? That confirmed in our mind that Bitcoin is the reserve currency of the crypto asset ecosystem. So it is the reserve cryptocurrency, which is a very important role. It's the flight to safety currency. It is Bitcoin's technology, or Bitcoin's blockchain, is the most secure of any other blockchain. And so it makes sense that Bitcoin would be the reserve currency of the crypto asset ecosystem.